financial sovereignty and mobilise capital. The 2026 African Economic Outlook delivers answers. Governors, policymakers and experts debate solutions. Listen, learn and put Africa in the driver's seat. Join us for the Knowledge event on strengthening and consolidating Africa's financial systems and agency in the changing world. On 27th May from 4:30 p.m. to 6 p.m. in Brazzaville, Congo. Live at the Kintiel International Conference Centre or online.
Good afternoon, good evening, colleagues, excellencies, distinguished guests, governors and colleagues. Thank you for your patience and we appreciate your commitment to be part of this event today. So we gather today at a pivotal moment, one in which the old certainties of global finance are shifting beneath our feet. Fragmented global markets, tight financial conditions, and shifting geopolitical alliances have underscored the importance of robust, resilient, and inclusive domestic financial systems. For Africa to mobilize capital at scale and assert greater control of its development trajectory, it must strengthen and consolidate its financial institutions, its markets, its regulatory frameworks, while at the same time deepening regional financial integration and innovation. So the thematic chapter of the Africa Economic Outlook, the 2026 report, examines how Africa can strengthen and reform its financial architecture to make it fit for purpose, enhance financial sovereignty, and mobilize capital at scale through better coordination, risk management, and more efficient integrated financial systems. And it also discusses the policy actions required for implementation. We were meant to have two panels, but given the time, we decided to merge into one panel. And that panel brings together the people who work daily inside that system. Central bankers navigating the tensions between monetary stability and development imperatives, legal experts who understand the regulatory bottlenecks that deter investors, leaders who are in various ways have changed the system or either expanded the use of guarantees and de-risking. So all of these, their perspective is really grounded on and operational, and this is exactly what this conversation needs. So let me welcome our panelists to the stage. Their Excellencies, Monsieur Dieudonné Fikiri Alimassi, the first Deputy Governor, Central Bank of Congo. Monsieur le Gouverneur, si vous pouvez monter sur...
Mr. Governor, to the stage.
Monsieur Ngeto Tiranae Yambai, Managing Director and CEO of Fagas. Manuel Moses, CEO of ATD. Monsieur Khalidou Gadio, Co-Chair of US Africa Practice DLA Piper. Cedric Montecho, Chief of Business Development, representing His Excellency Abdullah Al-Musaibi, President of Badeya, and Professor Carlos Lopez. Please welcome them to the stage. Non, vous parlez de là. Très bien. Thank you very much, and thank you for your time and your patience today. So let me call to the lectern the Governor of JBIC, His Excellency Mr. Nobumitsu Hayashi. You know, Japan has really been a consistent and long-term partner to African development, and its experience in building deep domestic capital markets over a decade is well documented. And the Governor is going to tell us a bit about the lessons from Japan's own financial systems development and what are the most transferable to help African countries build that same depth and resilience. And, you know, Governor, you have the floor. Thank you very much.
Yeah, thank you very much for your kind introduction. I am Governor or CEO of JBIC, Japan Bank for International Cooperation, which is an official financial institution of the Bank of the Government of Japan to support Japanese industries abroad and to serve the basic needs of the host countries. Over the years, we have done many projects in Africa, huge project in infrastructure and energy, also smaller project with very special, highly social needs in order to enhance the quality of life of the African people and to create good employment. I want to share our experiences in Japan and in Asia. And as you were saying, Japan financed its own financial needs after we have been devastated in the Second World War in 1945, as we revived back to be an industrial power and to be a high-income country. Much of the financing has been domestically mobilized. Japanese people with fairly tight foreign exchange regulation and banking regulation kept their money mostly on Japanese banks, including National Post Bank, and that finance went to priority areas of manufacturing, investment, and infrastructure. And they also financed government as well. That is how the Japanese have mobilized our money, and our government has always been issued since then in Japanese yen. That's the experience of Japan. But if you look at Asian countries, the picture is very different. There has been a robust financial flow into many Asian countries in the 1980s and 90s. But until in the late 1990s, there was a very severe Asian financial crisis. It hit one country after another. But luckily enough, most Asian countries didn't waste the crisis. They came back with a much stronger and sound macroeconomic policy and stronger banking regulation, tighter foreign exchange regulation, and drive the development of their own domestic markets. While regionally, there was a lot of financial integration and financial cooperation within the region. While you may say that African financial markets are very much fragmented, but still I feel Asian markets still are very much dominated by the presence of US dollar. But still, there's a lot of robust regional financial cooperation among ASEAN Plus 3 being China, South Korea, and Japan. There's a constant discussion between the finance ministers, central bankers, and a fierce, very strong network of foreign exchange reserve and swap agreement, just in case, and also an initiative to develop Asian bond market with local currencies, with a current credit guaranteeing mechanism. So I hope we are doing a lot of financial collaboration because our real economies are very much integrated. So I would rather say before financial integration, you need a lot more real economy integration because internal trade and internal investment within and between Asian countries are now the real driver for sustained economic growth in Asian countries. I hope our experience in Japan and Asia can be any suggestion for you to start a conversation. Thank you very much.
Thank you very much. Thank you very much, Governor. The governor has to catch a plane, but thank you very much for sharing your insights. And we do hope that, thanks for the lessons, and we do hope that, or rather our aspiration is from the African financial markets to get to the same level of depth and resilience. So thank you very much. So let me turn to our panelists here. Et je vais commencer avec vous.
Let me start with you, Mr. Governor. Mr. Dieudonné Fikiri Ali Massi, you are the first governor of the Congo Central Bank. So, Mr. Governor, with the double monetary or currency circulation, in Congo, what are the main challenges and opportunities when it comes to preserving the credibility of policies and when it comes to also beef up the build the trust of investors? Thank you for this question. One thing is for certain, if we have found ourselves in a situation where we have this, the use of the dual currency in the DRC, it's because of the macroeconomic instability that we went through for many, many years. And the economic actors, stakeholders decided to use the US dollar as a payment currency. So how can you preserve the credibility of policies? You have to stabilize the macroeconomic framework. We've had a level of we went through a level of hyperinflation, 9,000% at the time. And due to that level of inflation, people moved away from the Congolese franc. And we have started implementing a stabilization program without the support of the IMF. And since then, the hyperinflation was resolved. We went from almost 10,000% of inflation rate to about 2.3% today. This comes to show that you have to stabilize the macroeconomic framework. That is the only way to maintain such a system as what we have today. However, there is one challenge. As you know, and I actually have to leave you soon to receive a medal from the governor. So we work towards bringing people back to the Congolese franc. We wanted to create this appetite again, and people we have restored this this trust in the local currency by stabilizing the inflation and exchange rate. And I think that creditworthiness and credibility can only come through the macroeconomic policies that we implement. Today's challenge is the use of technology. We have to improve our banking rates and financial inclusion. To date, we have very little coverage and financial inclusion. There's an issue at the fiduciary level also. The offer is less than $10 for the highest face value. And in order to crowd out the dollar, which is the process, the ongoing process, we must have a fiduciary structure and system that is such that with the mining, Russian Congo, that helps us to consolidate our currency reserves. Transactions are of the higher volumes, but with the fiduciary offer, we are unable to encourage this circulation and all of these policies that we are implementing. Since I don't have much time, that's in a nutshell what I could share. I can go into further detail, but in a nutshell, I'll say that what you have to do is stabilize the macroeconomic framework, accelerate also the financial inclusion in order to reach the underserved population. I think that those are that's the way forward. And another challenge, as I said, is to have a fiduciary system that tallies with the transactions, the volumes and levels of transactions that we have with this mining boom.
Governor of the Bank of Central African States. Monsieur Michel Diambala, dans un paysage régional fragmenté,
Mr. Diambala, in a regional landscape that is fragmented, how could bank assign financial and monetary integration in order to support the mobilization of capital for development? Thank you very much, Madam. So, as you said, I'm the Vice Governor of the Bank of the Central Bank of African States, which is an institution, it's a part of CEMAC. So allow me to start by thanking the African Development Bank Group for this invitation and for the opportunity given to us to take part in this panel discussion. Now, in order to address your question, I would rather give the place of the central bank in the financial system of CEMAC. So with the central bank and a number of institutions, including the Central African Banking Commission, and we also have in that financial system the Supervisory Commission of Capital Markets. We also have the sub-regional stock market. And so we also need to mention the Development Bank for Central African States. We are a majority shareholder of the banks of Central African States, and we chair the panel of commissioners of the Banking Commission, and we have a common supervisor. We also chair the Commission for Financial Stability of Central Africa, and this strategic position of the central bank enables us, and I forgot to mention this, we are also a majority shareholder of the Inter-Monetary Group of Central Africa, and this strategic position makes it possible for us to more or less guide policy, that is financial policy of the sub-region. At the level of the Banking Commission, there are a number of actions that were undertaken. In particular, we've just adopted the regulation relating to the single agreement which concerns a bank that is already established in the sub-region. After 2 years, it can also be established in other countries without going through the agreement, the approval process again. It can also be established in another country as a branch. at the level of the BDAC, that is the Development Bank for Central Africa, where we also majority shareholder, we have a number of agreements that we have signed that and make it possible to the central bank to bring funding to this sub-regional development bank in order to make it contribute to the financing of development. Since we can't do it directly, we do so indirectly. In GMAC, for instance, we participate actively in all the digitalization policies and in the process of accelerating financial inclusion. So the central banks of Central Africa also participate with states to put in place the development and financial inclusion policy that will make it possible to accelerate all implementation of all the measures that are adopted in the area. So, Madam Yaya, there are many other things that we do, in particular with the Capital Markets Surveillance Commission and other institutions. So this, in a nutshell, through this strategic position, this is how we influence the stabilization and the mobilization of funding or financing. Thank you, Mr. Vice Governor. Mr. Ngechu Chinaira Yambai, who is the director of FAGAS, the CEO of FAGAS. Now, the question that I have for you is, in the context of the strong risk perception vis-à-vis African markets, how can institutions like the African Guarantee Fund and economic operation can play a catalytic role to reduce risk, attract private capital, and also strengthen the integration of African financial systems?
The Vice President, you need to speak in English or in French or in Arabic?
French,
Great.
English.
I'm getting back in French. All right.
Gala, it's up to you.
OK. Shukran. Alors, très bien, Madame, je voudrais...
Very well, Madam. Like the Vice Governor of the Central Bank said, I would like to thank the African Development Bank Group for the invitation extended to us and for the opportunity given to us. As the President of FAGAS, I would like to reassert our commitment to continue supporting the ADB in its responsibility of impacting development in Africa. I know that the bank also does development, but it works mostly in integration and inclusion in Africa. Now, your question is very important, Madam. All the African financial institutions must wonder what have they done for financial inclusion and what impact has this was achieved. FAGAS, that is the Guarantee Fund for Economic Operation, that's been existing for 5 years, who is a leader in the area of guarantees in the sub-Saharan Africa, a multilateral African institution. We work to ensure that the risk perception in Africa should change. There are people who think that Africa has too many risks, that Africa is very risky, but they are not well informed. Investments in Africa, as supported by the Guarantee Fund, gives a rate of return that is higher than the interest rates. I think it's better to work to invest in Africa than elsewhere. But how do we do this? We have to work following the vision of the African Development Bank under that's in the new under the new African financial architecture. African financial institutions are working in silos, but they should work together. The mission of FAGAS is to de-risk, is to change the risk perception and to share risks with the banking sector and the financial sector in order to promote the transformative investments in states. This mission, I think we share the same vision with the African Development Bank and the other guarantee and insurance institutions. So how should we be more complementary than competitive? How should we complement each other than be competing with each other? So, Madam, all African guarantee funds do not cover 10% of the guarantee needs, and without guarantees, no credible investment is possible. So FAGAS, in its role as created by the heads of state of OCAM and the heads of states and governors of OCAM, so their role is to support the acceleration of investment in Africa. You realize that on the African continent, everybody admits that Africa is potentially rich, but why is it not being financed? That's an economic paradox. If you are rich, normally you should attract people to come and invest in your continent. So the mission of FAGAS is to de-risk, is to mitigate risk so that people can come and invest. But FAGAS alone cannot do this work. And I think that my brother to my right has been working together with us so that together we can put our knowledge, our know-how, our expertise and our resources at the service of de-risking Africa. So, Madam, we have the same vision, we share the same vision. The African continent and the governors of the two governors that have spoken, including the governor of the central bank, is the low rate of use of banking services. How many Africans have bank accounts? Very few, and it's a shame. So we need to make the opening of accounts free of charge. Today, we are in the era of digitalization. Why can the real economy of Africa, cannot be financed? Why can Africa's real economy not be financed? I think the farmers and stockbreeders should be able to finance and protect it and should be guaranteed by FAGAS so that Africa can eat to its fill. Madam, you are of the ADB, and I think that my friends here, Moses as well, we are all committed to supporting the financing of a real economy so that the agricultural economy can create as many jobs and wealth as possible. Thank you. Thank you very much. Thank you. Financial inclusion, the use of banking system is still low. Mr. Emmanuel Moses will give you the floor now. He is the CEO of RTD.
Sector's potential as a source of long-term development capital, and how should it connect to the broader financial system?
Thank you, Madam, for that question. And again, I would like to congratulate the bank for putting this excellent panel to try and discuss all these very important matters. As my brother Yambai has already described, in the financial architecture of Africa, there is a need to integrate guarantees as one vehicle that could help to mobilize financing. I would like to thank the two governors who have already spoken, and they lead by example. In my organization, I can thank the government of the Central Bank of DRC for recognizing RTD's guarantees for a long time. And that has helped us to use our de-risking instruments to cover bank exposures in DRC. So well done to DRC. I also want to thank the BDSC also for granting us a similar approval, whereby they've given us a risk weighting that allows banks that are lending to all these productive sectors to do more because we have given our risk guarantees. So thank you to the governors publicly. I want to thank you, and I'm encouraging other central banks in the room to do the same, because that's how we create a financial architecture that recognizes insurance and guarantees as part of the ecosystem. Now, coming back to the question of what should we do about the insurance sector, because we have this paradox that has been well articulated by President Sidi to say we have this paradox of $4 trillion of assets and savings in the continent. And yet we are saying Africa is capital poor. No. I think Africa has the resources. They are sitting in treasury bills, they are sitting in pension funds. We want to see how we can tap into that. So the core would be the regulators that manage pensions, savings, should take the lead from central banks who are here to say they should also put regulations that allow for those savings to be transported, transfigured, transformed through guarantees, of course, into the productive sectors. So a similar type of recognition is required that we can now tap into these savings and transform them into productive sectors. In terms of course, the logic has already been described by my brother Yambai here. Without the guarantor companies like ourselves, Fagas, FSA, who are highly rated, it is very difficult to convince regulators that the savings or the pensions of our population are safe. So we need recognition, and we are ready to deploy our tools to tap into that. I think the bigger message here is that Africa needs to finance itself first, and then Africa will then call the rest of the world to finance Africa. But we have the resources. If we rearrange ourselves under this NAFAD architecture, surely we can really move the needle. So this is my appeal and my submission. Thank you, Madam.
Thank you very much. Mr. Khalidou Gadjo. Mr. Khalidou Gadjo is the co-chair of the US Africa practice of the law firm DLA Piper. So, Mr. Gadjo, what are the most binding legal and regulatory bottlenecks to deep integrated financial systems in Africa, and what practical reforms would most quickly de-risk investments?
Thank you, Asatu. Yes, I think I am one of the few who would be not speaking on behalf of one particular institution. We, as a private practitioner, we advise, government, DFIs, and corporations. I had the opportunity to serve the bank in the past, so I'm very much familiar with the instrument of the African Development Bank as well as other institutions. Generally speaking, what we hear from private sector, why some investors are hesitating to come to Africa, they say a lot of things. Some of them are true, some of them not true. But basically, one of the constraints is the regulatory and the legal constraint. Regulatory in the sense that at the central bank level, they operate on the basis of certain type of constraint in terms of liquidity coverage ratio, which means they don't put enough resources for long-term use in project finance, which takes 10, 15, 20 years. So there are these bottlenecks, and some of them are actually from international institutions like Basel Accord, which also reinforce these kind of prudential ratios. So there need to be some discussions about how to improve that kind of constraints at the level. And that is true for sovereign debt fund, because most of these funds are, the main objective is preservation of the resources rather than the investment. So as a result, throughout this annual meeting, you've heard Africa had close to $4 trillion, but they're not available. They're not available because they are stuck into all kinds of constraints, legal and regulatory. And also, if, for instance, Africa were able to authorize municipal financing, that would be helpful because obviously municipal financing is generally used for water, for instance, waste management. Some of these infrastructure in most of countries are financed out of municipal bond. But in Africa, with a few exceptions, it's not permitted to use municipal financing. Municipal financing, therefore, is a tool and it's constrained. Then, of course, generally speaking, what we hear is that the perennial rule of law. And when foreign talk about rule of law in Africa, they're basically targeting 3 to 4 elements. They're saying that if you invest in Africa, the legal regime is not always stable because most of the time you sign a contract, you have certain number of provisions, especially from the fiscal regime, and it happened to change. And that leads to litigation, and litigation is very expensive. So stability of the contract is very important. The second issue is also some level of predictability on the judicial. Obviously, if decisions are not predictable, it is very difficult to know really how to measure your risk. Therefore, that's again a constraint. Finally, we also have clients who have actually gone through the judicial process, who won cases but cannot collect. So enforcement is a major issue again in Africa. Not only it's difficult to go to the court, but if you go to the court, even if you win, sometimes you cannot enforce. So these are some of the constraints. Now, also we observe that in most of the infrastructure projects, there are models that use the PPAs and concessions. They're not always adequate because, as you know, most of infrastructure projects actually generate resources in local currency. So, and then they have to reimburse in foreign exchange. So, you know, lawyers, of course, we craft the agreement so that we have like a foreign account. So central bank will step in. My two predecessor in colleague will know, I mean, the difficulty to get, you know, approval of establishing foreign exchange account in outside the country. So these are some of the problems. And now, of course, the solutions are there. One of the solutions is the word has been used fragmented. So therefore, the contrary to fragmented is unified. There are a certain number of unions in Africa, like UMOA, you know, BEAC, and other regions. And I think this is the way to go, because in one market, like UMOA market, you know, every country can borrow, so you can have a cross-border transaction, you can mobilize resources. In terms of banking, and I think, again, the chairman or the governor mentioned that if you get a license in one country, you don't need another license in another country. So these are really practical solutions, and I think it can work only if there are further and more unified market. The last but not least, I think my two predecessors spoke about it. The perception of risk in Africa is not justified, but it is real. It is there. So therefore, we have to deal with it. One way to deal with it is precisely to offer them certain type of guarantees and insurances. Therefore, I think the role that, and it's not a surprise that the president of ADB is specifically mentioning ITD, is that because I think an institution like ITD, if properly funded, could actually mitigate a lot of risk in Africa, and therefore increase funding. So I think that's one of the solutions, and FAGAS is equally participating in the same scheme. So I would just stop here and just say that this is really what I think, you know, from a private practice. Thank you.
Thank you. Thank you very much. Let me now turn to you, Professor Carlos Lopez, who is the Honorary Professor of the Nelson Mandela School of Public Governance at the University of Cape Town. Professor Lopez, the structural reforms needed to strengthen Africa's financial systems are well understood. Yet, implementation remains slow. What is the most important political economic obstacle standing in the way, and how can it be overcome?
Thank you, Asatu. I think the points that have been made by my predecessors here in the panel, particularly Mr. Kadio, are excellent. And I think if we try to understand the structural reasons why we are still debating these issues all the time, because, you know, the issues of risk, we debate all the time. The fact that we have 4 trillion has become a bit more prominent in the debate, but we have always said that we needed to mobilize more domestic resources and we needed to have more efficient fiscal machineries and so on. All of this is not completely new. What is now missing is to go a bit into the granular details of what needs to happen. And some of the points have been mentioned here, but I wanted to dig a bit deeper. For instance, let's take the Bank of International Settlements, Basel III regulations. I think, you know, they have been created basically to deal with the crisis of subprime. So what happened is that unintentionally, we de-risk Africa out of the global banking system, because we wanted basically to deal with the problem through prudential rules that are more robust. But then we basically created a penalty for Africa in liquidity. That was not the intention, but it is what is happening. And the reason is because we are not really sitting at the table most of these times where these issues are discussed, because we tend to be so concentrated on ODA and concessional lending that we don't deal with the structural issues. And I don't think it is any plot. Sometimes it's just not being present. And we need to be really cautious that a lot of these issues do require a different approach of partnership and a different discussion altogether. And I think we have to be a bit more specific on what the entry points are. And the entry points is the BIS committees, the Bank of International Settlement committees. Are we really having a proper participation there? Is the Financial Stability Board? Is the OECD export credit arrangements that sometimes undermine all the concessional facilities that we receive elsewhere, and things like that. So the prudential rules, we tend to deal with them the same way we deal with trade. We behave because for us to be considered as good students, we behave when others are throwing the rule book. So they create the rule book, they throw it out, but we are the ones who are supposed to follow. If you are, it's no longer the case, on a structural adjustment program, you had to deal with, let's say, 100 something policy reforms. And then, you know, when you end at the end of those reforms, if you are lucky, you really don't get liquidity as a result of it, because the structural problem has not been addressed. So this is the dilemma that we have. And I think because we have that dilemma, we kind of have a hidden tax. And this hidden tax is not interest rates. That's the appearance of it. It's sort of the tip of the iceberg. The hidden tax is volatility pricing. Is the fact that our unpredictability, the point that you were making, our unpredictability has been ingrained in the way we deal with Africa. And our macroeconomic policies, as good as they have done to tame inflation, as it was just mentioned for the Republic of Congo, they are geared towards just meeting external obligations, not to deal with our own structural transformation. And by just being focused on one aspect, not the other, we end up being, you know, sort of incapable of dealing with the structural dimensions such as this hidden tax. Hidden tax is where? It's the foreign currency volatility. It's the refinancing risk. It's the legal uncertainty. It's the liquidity risk. It's the exit risk. It's all these things, these risks that we kind of put in the bag as, you know, just a given, and we don't deal with each one of them. Then we have this sort of hidden tax that comes as a result. And I think basically Africa is not paying for capital scarcity. I think we are paying for the absence of predictability. And unless we deal with the predictability, we'll continue to tackle the wrong, you know, sort of target. And I think this is really one of the major problems. And guarantees will go a long way to address some of these problems. And I think it has been understood very correctly as one of the priorities. Another one is how we deal with the rating agencies. And this is not an ideological debate. We should not go there and say, oh, we don't like the rating agencies. That is not producing any results. Neither, and this is a personal opinion, is it for us to create an African Union rating agency. That is also not going far. It's not going to produce results because the market doesn't react, you know, with emotions, or even less with obvious political positioning. An obvious political position, yes, it's there. But obvious? No, they don't accept. So the common critique that we have that the rating agencies are biased is correct. But what we really need to discuss with them is what metrics are they using. Some of them are pretty known and transparent to a point, but there is a lot that is subjective that needs to be discussed too. That is the part we have to concentrate on. So let's have a framework that is acceptable for us to enter into this type of discussions. And I think this controversy between Afreximbank and Fitch is actually helping because it's demonstrating the limits of the current approach. And I think it's demonstrating also that there is a lot of hidden concepts that don't make any sense. But then we have to go a bit further, and I think we have to be more sophisticated in our critique. For instance, we have to try to understand why is it that we are always structurally penalized in procyclical moments. So you have a crisis, you have a shock, you have not produced it. It's like Lehman Brothers or the war in the Gulf or whatever. So we have the first shock. And then we have the second shock, which is all the evaluation of risk is rear mirror. It's looking at not your potential, but what has just happened. So you have a second shock. But this second shock is not given to everybody. That's why Ukraine will be treated very differently from Burkina. See? So we have to engage in that type of sophisticated discussion. Different metrics, different ways of looking into procyclical. So we are not going to gain by just being sort of vociferous with proclamations. We need to be more specific. And I think that's the task before us. New financial architecture, new African financial architecture. Next step, what is it? It's to identify these granular elements that are going to unleash the potential because they are going to deal with the real constraints. These constraints that, as Gadio was saying, are structural. For instance, the fact that the mandate of a pension fund is impeding them from actually putting the money where we are saying they should. But let's deal with that mandate. And why is the mandate there the way it is constructed? Part of it is because of returns. So let's prove that the returns are possible elsewhere. That is an instrument. It's not because of a project. You go there and try to sell a project, you are not going far. It has to be an instrument. So I think the discussion has to mature. And some of the contributions that have been made demonstrate that we are getting there. So now it's a matter of just keeping this momentum going. Thank you.
Thank you. Thank you very much. Thank you. So let me now turn to you, Cédric Montecho, who is the Chief of Business Development, and he's today representing His Excellency Abdullah Al-Mulsahbi, the President of BADEA. So BADEA has co-financed major African development projects alongside the Islamic Development Bank, the Saudi Fund, the UNPAC Fund, and others. So what does the Arab Coordination Group's experience teach us about mobilizing long-term development financing for Africa at scale?
Thank you very much. I have the privilege to represent, as you say, His Excellency, the President of BADEA, during this panel. And our experience in mobilizing that capital for Africa is through one word, is partnership. We have made partnership not an aspiration, but a method of work. And in Rwanda, in Côte d'Ivoire, in Senegal for the rapid train, and in other geographies, we pull capital together with our Arab coordination brothers, the Abu Dhabi Fund, the Fund of Qatar, the Saudi Fund, the Islamic Development Bank, the Arab Monetary Fund, us BADEA, of course, and the Arab Fund for Economic and Social Development. So all these funds that we pull together assist us to make the project rapidly implemented, pull up substantial capital, align due diligence items so that the government or the stakeholders do not face several and conflicting and different paperwork. So this method has assisted us to be successful over the 50 years of our work. And I am also privileged to see in the panel that we have regionalized our presence in terms of strategy. We are shareholders or co-shareholders in the Development Bank of Central Africa, BDEAC, here, based in Brazzaville. So we are co-shareholder with the Central Bank. We are in an alliance where we committed $200 million in Niger to help the guarantee funds to deepen the guarantee products toward SMEs. So this was an initiative that we've done with FAGAS, AGF, and the like. And I'm also happy to say that we work closely with ATD also here to assist. So some of the institutions receive seed capital from us. We increase the capital of the development bank in each geographies, the central one, the development bank of West Africa, of Southern Africa, the development of East Africa. So this is the method that we have found successful over the years.
Thank you very much. For this very rich discussion. So maybe because we're running out of time, but I'm going to challenge you. 4 words, not more. Citer un engagement de la part.
Quote and commitment of a partner institution that you would see concrete before the next annual assemblies in 4 words for each of you.
From governance, institutions, or partners, would you most want to see acted on before the next annual meetings? 4 words.
There's already 3 words. The professor's remarks were very important, and I wanted to say something at the back of what the professor has just said. It's true that predictability is ensured by the macroeconomic framework, but it's true that structural reforms are not there, and you're not really getting to the root cause of this. I'll give you an example. Let's look at our dependence on exports. These are raw materials. They expose all our economies to volatility, like he said. Indeed, a study from ECA has demonstrated that the negative variation of Africa's GDP is affected by the drop caused by volatility. So why today Africa is not addressing this problem, which could improve the possibilities to give us financing possibilities, even increasing our reserves, for example, by doing diversifications, not just of the economy, but also diversifying partners in the processing. This could help to resolve the problem that Professor has just talked about. We have listened to your wishes. You're talking about 4 words. I would say simply, Africa has what it takes, which are assets to transform its economy. Thank you very much. Mr. Auguste. Thank you very much, Madam. 4 words. I would say, let's go further with reforms. Let's go further with reforms. Institutions are there. The AFDB report has dwelt at length on what we need to consolidate and to strengthen our financial system. What is needed is there. We need to go further. I can see who's going to win the challenge, Mr. Yombai. Madam Vice Chair, unfortunately, I'm not good at summarizing things. Thank you very much for your participation. The NAFAD is an innovative decision, and we need to integrate it in every way. We need to stop the copycats. We need to invent what is good for all of us. I call upon the central bank governors. Every citizen should have a bank account. This is a citizen's right. Thank you.
4 words. We're going to see the winner today.
Let us mobilize more domestic capital for Africa.
Great. We're getting there. Mr. Gaggio.
That's difficult for a lawyer, but
Yes, lawyer, it's complicated.
I tend to speak a lot. More integration,
More integration.
clearly, that's very important.
Okay.
The second thing is we have to address those regulatory constraints, and I think Mr. Lopez has gone into the granular level, and I think that's one of the problems. So we definitely need to fix it, because we say we have lots of money, but it's not available. Why?
Thank you.
We have to enforce our laws, and we have to reduce the perception of risk through the guarantees.
Thank you. Professor Lopez, 4 words.
Tough. But I will say a sentence instead. No country develops sustainably on the basis of others' balance sheet.
Okay. Monsieur Montesio, vos 4 mots de la fin.
Mr. Mutesho, your 4 words to wrap up.
Within NAFA, that's 4. Arab-Africa partnership through BADEA, within NAFA through AFDB.
Thank you. A warm round of applause for our panelists. Thank you very much. Thank you for your time and thank you for your patience. Bonne soirée à tous.
Have a good evening.
On va prendre la photo. On va prendre...